All right.
Hello, and we are live, Kathleen. Well, welcome, welcome. Kathleen and I are so pleased to have you join us. We're going to stray a bit today from going to have a guest who will, share their experience being online, having a business, to address a number of questions that have been coming my way. I am Emily Bolton. I am a CPA and certified tax coach. And Kathleen and I have both been getting questions, and we thought we'd share this hangout with our viewers and address some of those questions. So, Kathleen, I'll hand it over to you to introduce yourself.
I am Kathleen Packard, and I have been a cosmetologist and coming into the online world the last few years. And one of the things going on today, and this is very timely to be talking about this whole tax thing now, it's the end of the 2013 year for a lot of accountants, and they're doing all of the extension work that was put off from last April. So they're as busy right now as they were last April. and especially for new businesses is, what kind of setup should you have for your business records, and what kind of entity should you be? And I think this is where Emily can bring a lot of insight into this. Having just been at my accountant here today, this is very timely for all of us.
Yeah, it is, and it's extension season for us, and still busy. I have a number of tax returns left myself, my own including. I feel like the cobbler, whose kids don't have shoes. But yeah, a little bit about me, just a little bit of history. I have been a CPA for over 20 years, and I've, in the last, 4 years or so, gone after a professional designation, a certified tax coach. And the reason is my focus on tax planning is that, particularly in my first tax practice that I had over 400 clients, and I had that practice for 6 years, 5, 6, 7 years, something like that, some of that informally. But one of the things that came about is that my clients, my small business clients, my entrepreneurs, my consultants, my my tradesmen were really begging me to help them save monies. And I was well known for, knowing every deduction under the sun and just really just doing all the deductions. And yet it only provided so much relief. And as a happenstance, I stumbled onto some training with an attorney who trained CPAs, and it was entities. It was tax planning for utilization of different types of tax entities, and my whole world view opened up. I think it was a 2-3 day seminar, and that first night I remember I came back, I called the client and said, "Oh my goodness, I think I can save you money," and as it turned out, we saved that client about $8,000 in the first year and restructured their business, and every year thereafter they've been saving significant dollars. So there is that need. There's a real need to step back and look at the facts of the client to determine what is the best tax strategy. So that, unfortunately, isn't always done. I wish that it were, but I was a CPA, licensed CPA for 5, 6 years before I realized and understood how to really look at a business relative to different entities and run numbers and do projections. Up until then, I was really compliance-based, which was based on historical data and just essentially taking what had already happened in the prior year and getting that, the right numbers on the right lines on the right forms and filed in the right time frame. So, you know, that's awesome and that's great, but that's only part of it. So when I really discovered that, oh my goodness, what if this? What if that? What if we did this? What if we did that? And it's so important to look at the fact set to determine what's the best course, because you know, I like to say that taxpayers, they're like snowflakes. You know, there's no two taxpayers alike. Would you not agree with that, Kathleen, and all the folks that you see?
So agree. And there, you know, there's so many different ways of looking at it, and like you say, the more I get educated from my own account here, and with working with Emily, it's like, oh my. And I've made my own mistakes with in my own business. I was a sole proprietor for 20 some odd years when I decided, with a move and hiring people, that I would go to a different entity. And now looking back, and especially after talking with my accountant today, it was not the right thing for me to do. But, you know, it's really getting that appropriate information like Emily has that can make such a difference in the decisions that you make and how you know, how that works out for you and how you save money with your taxes. Yeah.
Yeah,
it makes important.
It does. It makes a great big difference. So I tend to think, Kathleen, that a good portion of our viewership are those that are considering a home-based business, you know, perhaps already have started a home-based business or have been in for a few years, but they're still not comfortable with the question or the answer, perhaps, what type of business entity should I be? And, you know, I love to give this kind of consultation. I do this all the time. I help folks with this question. It's one of the most common and probably one of the most important questions to start with. And I like to say, keep it simple, sweetheart. That K-I-S-S, right? Keep it simple, sweetheart. It's so important when you're starting out to be there's so much that you have to consider. You have a business that you're trying to run. You have a product you're trying to sell, or consulting services you're trying to sell. You've got so much that you're doing to create this business that you want to be able to keep your infrastructure as simple as possible. So I look at our home-based viewership, and many of them are considering affiliate marketing, or they'll have a home-based consulting business. So I recommend, unless you have liability issues, I truly recommend a sole proprietorship for folks. And I do that again because it is simple, but also, and very importantly so, it's the most cost efficient. So it's the least expensive. It's the easiest to operate, and that is very important in the beginning. You know, you don't want to overwhelm yourself such that, you know, you just say, oh, throw up my hands, this is too complicated, I don't want to do this anymore. And you don't want to have a complicated business entity that's just going to get you entangled in the paperwork, the state filings, the additional tax filing. So keep it simple. Now, if you do have liability concerns, I do recommend legal counsel. If you have employees, that's a legal issue. You know, that's a liability potential. So that's something to keep in mind. If you have property and people are coming on and off your property, well, that's a liability issue, in which case I recommend an LLC. You can still remain a sole proprietorship in terms of being taxed, but you have established a limited liability company, which is provides some protection. Now, I'm not going to go into all the details because there's certain things you have to do to make sure you maintain what they refer to as a corporate veil, but for purposes of this discussion, if you perceive that you have liability issues, then an LLC would be the most simplest way to go. So once, Kathleen, a business is established and they're really making good monies, and monies that say you might be able to support yourself on, your family on. So somewhat full-time income, if you will. When your business has reached a full-time platform, if you will, and you're making that kind of money that you can support yourself on, well then it's advisable to look at tax planning, additional tax planning opportunities relative to entity selection. Now, making an S election for a small corp oftentimes is what one would do when they have a good amount of profits and they're trying to save some tax dollars. But I would just totally caution you. I caution you, run the numbers. Never, ever accept any kind of advice that says, oh, you need to be an S Corp. Never do that without running the numbers. Because for many home-based businesses, keeping that sole proprietor entity actually may afford them greater tax savings. When you look at the fact set, when you look at, do you potentially have children that you can employ? Do you have a spouse that and they don't have insurance outside at another employer? Perhaps you can hire the spouse and have a tax benefit relative to the insurance benefits, if you will. Retirement amounts, if putting a lot of money into retirement is something that is of interest to you, that sole proprietorship may actually, when you take these numbers and you actually run them relative to your tax fact set, you may very well find that being a sole proprietorship may be the best money kept in your pocket strategy that you have. Now, I'll be honest with you, keep it simple, do the sole proprietorship, you start making good money enough to support yourself, you want to have some tax planning advice done, but the honest part that I want to give you is often tax planners, we use multiple entities, we actually do, because no one entity does it all. And so we'll take a look and we'll say, oh wow, let's do a little here and a little there, and we can make it all happen so you save the most amount of money, but you're getting into complexity. But only then do we want to do it because the money savings is so there. So that's a little, I suppose, over the top, but for most home-based businesses, please keep it simple and remain a sole proprietorship unless you have that liability issue, and concentrate on growing your business. Concentrate on putting your energies into a business.
Absolutely, and especially when you're starting out in this, because you've got a learning curve, you've got you're investing in yourself with trainings and things like that. So your income may or may not be much those first few years, and
yeah, and that's a great point. One of the things that I do advise my clients and folks that come to me just for simple consulting, particularly as they're coming online or they're looking into the affiliate network marketing realm, I really like to caution them to proceed slowly, if you will, but fully. And this is what I mean. Sometimes you come in and you need to get your bearings, you need to get your training, and you need to find out whether or not this is or isn't for you. And for many people, that takes a couple of years. And one of the regrets that I hear over and over from people is that they felt pressured to get all in, and they spent a lot of money, and they still don't know what they're doing. They're still not making any money. They have concerns of whether or not they're going to have hobby loss rules that affect them. So their thing is, I wish that they say that they wish that they hadn't just thrown in all of this money. My caution is that get into something that's affordable in your price range, if you will, something that resonates with you. But enter in at that beginning. Get your arms around it. Many people coming in are brand spanking new, Kathleen, and they have really no idea.
And it was like Rita was saying yesterday, she didn't know what an autoresponder was, or lead capture pages, and all of this learning curve that is the technical side of running the business. So it is a wonderful business. It's just that you have to engage. You've got to get in there and do and learn. And so that does take some time. That takes a commitment. That takes some time. And, you are going to invest a few dollars in the process.
Yeah, because one of the things when we discuss hobby rules, and oftentimes coming into the industry, money is spent and insufficient income is made. That results in having expended more than income came in. And in some cases, some people don't make any income for a couple of years, perhaps. So the thing of it is, when the rules come into play about whether or not you actually have a for-profit business or you have a hobby, the IRS looks towards certain factors, and one of them, as regards to this particular topic, is that you are treating it like a business. So you are getting that education, and it would be unwise to just fully go full speed ahead without doing due diligence to look into the business opportunity. If you're going for profit, you need to be able to look at the profitability of the business, or a game plan to get that profitability, and that does include expenditures to get that education. So again, there are tiers to do that. I look at it like informal online college course, right? So, when you're going to pay for the first semester. You pay for the second semester, but you wouldn't go in and pay for all 4 years right away. And yet, for some reason, individuals will go and jump all in and get all the levels, because there's a bit of a pressure that if you take your business seriously, you're going to get all in. And unfortunately, that's not a wise business decision, and in that they didn't look to see whether or not this really is an investment. This is a business that they want to keep. Because one of the things that I do find is that a number of people start a business and then find out they don't like it for whatever reason. They don't like the industry, they don't like the amount of work, they don't feel comfortable doing that kind of work. They don't like making phone calls. They don't like having shipments that they have to make. Whatever it is, it's all personal to each one of us. But they do discover that it's not quite right for them. So better to take your steps, get in, get your arms around the industry, and then continue to grow and put and invest in yourself. We all believe we should be investing in our growth, increasing our understanding, but master the first levels. Master that those core portions. That will help reduce your losses. One of the things the IRS does look for is if you are in a loss situation, how can you cut back? They do expect you to go to your advisors and seek, how is it that I can turn a profit here? How is it that I can cut back on my losses? And part of that is just to really know what your investments are now, the assets you've already purchased, actually complete the studies that you purchased, because many of us will buy into informational packages, right? And oftentimes people don't actually do them. Kathleen is. Do you know anything about what I'm talking about?
Well, it's funny because it becomes when you're new, and you're searching for that information, it becomes like the next shiny object. This is the thing that's going to make me successful, rather than focusing on getting to the people that really can help you in this business, which is you want to seek out somebody that is very successful above you in the business that you're doing, so that they can share with you how they got there. It may not be the person you came in under. It may be 1, 2, 3 levels up that really is having that success that you want, that can share with you that information. And not to discourage you from this profession, because it is an amazing profession, but to give you the knowledge that you need to do your due diligence when you come into this.
Yeah.
When, having run an offline business for years, this is a steal. To come online is a steal. I can tell you that you don't. I mean, just rent, lights, heat, insurance, just the basics to open your door. You can run this whole business for a year for what you pay in a month for a brick and mortar business. So,
yeah.
you know, that whole thing is, just because you don't have that same huge investment doesn't mean that this is not a viable income source. But
Yeah.
you have to treat it like a business, and that means all aspects of it. That means your accounting, that means your tax planning, that means all aspects of it. And that's why Emily is so important here to share with you, to get you off on the right foot, to get you in the right mindset tax-wise, and to protect yourself.
Yeah, yeah, absolutely. So many great points, Kathleen. So many great points. So I'll step back and just recap. You want to keep it simple. Sole proprietorships is really the way if you don't have liability. And most home-based businesses, most affiliate marketers really don't have that liability exposure that, say, a restaurant would have, or you, Kathleen, have because you have an employee, or you also have brick and mortar, so people are coming on your property. And sometimes there's partners, you know, as well, and in which case you've got the liability exposure there. So most of the folks are most likely going to be home-based and without a lot of liability exposure. So sole proprietorships would be a great, modest, comfortable way to get started. And again, then it comes down to looking, you must treat your business as a business. You must have that business focus, because the IRS is going to be looking at that should it come into play. And the fact of the matter is, many businesses run losses for a number of years before they really get their their groove going, until they really learn their craft, develop their client base, their customer base. So losses in the first years are common. So we want to one, work at keeping them down, because we want to keep as much money in our pockets as possible. We don't want to just throw money away. So that is why we want to be wise spenders, and again, the IRS is looking at that. They're going to be looking for documentation, good documentation. So starting a business, you need good documentation, and when that comes to accounting records, you really ought to, you do not have to with a sole proprietorship, but you ought to have separate bank accounts, separate accounting for the mileage that you have on your vehicle. So you want to keep your income separate, you want to keep your expenses separate for your business, you want to keep documentation as well about how you're conducting your business. Because if you're ever audited, you want to be able to prove that, yeah, sure, I do this business. Here I keep a separate accounting of my income and expenditures, my mileage. You also want to be able to show that I work regularly. You know, regularly is consistent and a process of just systematized, standard, regular amount of time each week, or if it isn't, depending on your type of business, it could be maybe just monthly type of a business income, but I think for most of our viewership, it would be weekly. So you're looking for 10, 15 hours. You're looking for something that's indicative that you really are working at this, and you want to be able to document that. So keep a calendar. If you are talking to people about your business opportunity or potential for consulting, then you want to have a calendar of, you know, the who, what, where, when, and whys. You know, you really want to be able to document that you spoke to so-and-so on the phone, this was the topic, and just have that kind of record that indicate you put your time into it. You know, you also, again, we mentioned getting some advice from professionals, like, hey, I'm running this business, talk to your tax professional. How is it that I set this up? What do you recommend? You also want to, they'll be looking at the background that you know, do you have any experience running a business? And if you don't, they're going to be looking to see that you're looking into how to run a business. They're going to be looking into seeing that you are trying to get educated in that business. So you want to keep really good records on that. Those are the factors that they're going to be looking for. So if you find yourself a couple of years out with losses, you know, people are then worried and say, oh, I can't take those losses. That's not true. The IRS has to prove that you do not have a profit motive. You can actually have losses more than 3 out of the 5 years. You can have losses for a number of years. You just need to be able to document that you are operating your business in a business-like manner. So consider what other businesses are doing and do that in the sense of get a separate checking account, keep your income and expenses separate. That's one of the reasons why I'm a big proponent of TaxBot. And you know, and I'll just go off a little here. And
it's a wonderful thing.
It is, because folks, you know, my entrepreneurs, my clients, my small business clients that come to me, they often throw up their hands and just say, you know, Emily, I don't really care about the deductions. I'll lose them. They really haven't done their accounting. And at the idea of going back over the whole year and going through their personal checking account to get their business expenses out because they didn't keep a separate account, or to go into their credit cards and pull that out, or to go into all these miscellaneous folders where they have all of these receipts and what, they can't be bothered. And consequently, they don't know what deductions they have, and they throw them away. And those can add up to, you know, really thousands of dollars, really easily thousands of dollars in tax deductions, which, depending on your tax rate, can be a serious amount of tax loss due to not tracking. So it is so very important to have a system to track your tax deductible items, personal and professional business ones. And so, you know, I am a supporter of TaxBot. It is a very simple cloud-based app, or online, the full version online, which makes it great when I get back to my desk. I can just throw stuff in. But if I'm on the road, one, it has the GPS, and it also has, you know, the ability to just enter in, and it guides you very simply on everything that the IRS will require of you. So the, you know, the who, what, where, whys, you know, it's all there. Everything that you have to have, it has an entry point for you to enter the information, and allows for you to take a quick picture of that receipt and attach it to that expense item. So I absolutely love it, and I love the GPS. Now, this is the thing with mileage, and that's why TaxBot is so awesome, because it has that GPS factor, that component. And the thing of it is, people, if you do not have written records, contemporaneous, meaning at the time that you are driving around, or within a week, really, the IRS, it's really roughly within that week, but within that time frame, certainly, absolutely, before you sign and file the tax return. But if you don't have that information, you absolutely will lose it in an audit. Guaranteed, will lose it in an audit. And generally speaking, and it varies by business, but I would say for my client base, that's usually 2, 3 to $5,000, $10,000 worth of deductions. But unless you're really driving around, if you're only driving around modestly, it could be lower. But if you're driving around a fair amount, going to visit clients or potential customers, that can add up really quickly in terms of a deduction. You must have the documentation. TaxBot has that very affordable application. I highly recommend it. Sole proprietors oftentimes don't have a separate bank account. They generally run right out of their personal checking and out of their personal credit cards. It's doable, not advisable. It's certainly not advisable if you're going to be up against the hobby loss rules, because a separate business, a for-profit business is definitely going to keep their accounting separate, and the IRS is going to take a look at that, and they are going to consider it. Now, I get it that when you're starting out, you don't really have a lot of money, so then how do you handle that? Well, that's where good personal finance management comes in. That's where a good software comes in that monitors, that you manage all of your personal expenses with. And so if you don't have a separate account, a bank account, checking account, if you don't have a separate credit card for your business purposes, and they all are blended, then at least you can show, should you be audited, that here are my records of reports contemporaneously kept. And so as you go through your checking account, you can download this right into the software from your bank, from your credit cards, and have it right there. You can go in and categorize so that you can allocate those business expenses, or maybe the business income that comes in, you can allocate that to business categories, so you can separate it that way, and that will be very helpful. And at a minimum, that that is something that ought to be done, because the IRS is going to open up all of your accounts. They are going to look at your checking accounts, your savings accounts. They're going to look at your credit cards. They're going to be looking for what's flowing through, and you want to be able to categorize that accurately to benefit you, to keep those losses. Those are valuable losses. Kathleen, as I was speaking, anything that came to mind, something you think I didn't?
One of the things that came to my mind is that, because most people that, even through my years of people starting businesses and stuff, they go into a business because they love what it is that they're doing. They don't love the accounting. They don't love anything to do with the bookkeeping. And just to put another plug in for TaxBot is, they don't have to know accounting. They don't have to know bookkeeping. All they got to do is plug in the information, and the reports will be there for the accountant at the end of the year, all sorted out, all for them. They don't have to know debits and credits and profits and loss and balance sheets and all of those, good journal entry type of things. My background is such that I had all that prior to going into business, so I felt very fortunate to have that knowledge. But I know what a nightmare it is for people that don't. And so this keeps it there again, very simple.
Very simple, and that is one of the reasons why for sole proprietorships, knowing full well that they often don't have separate accounts, that the personal finance software to manage through that, again, it doesn't take an accounting degree. I really do not recommend QuickBooks. Most people think, oh, I got to use QuickBooks, just like they think, oh, I got to be an LLC. No, no, and no. Keep it simple. QuickBooks takes a fair amount to learn how to do it and use it properly. You can really mess things up, and it's no fun. People don't want to do it, and therefore they won't.
Unless you've got inventory and you've got employees, there's no reason to get into that level of bookkeeping.
That's right. That's right. You really want to keep it simple. You want to be able to focus on your business. You want to be able to enjoy it. You don't want to get bogged down in scary things such as taxes and bookkeeping and debits and credits. I know we're running a little over our time, but there is one thing that I did want to state too. Depending on what kind of entity you have selected. If it's a sole proprietorship, then when you get paid, you can get paid in, like in your name, because you don't have like a doing business as type name, although you could. But like if you are an LLC, if you are a corporation, then you have a separate taxable entity, a separate legal entity. And that separate legal entity requires that you are compensated and your reporting comes in under the tax identification number for that separate entity. So it's really important for folks to realize, because I see a number of people becoming LLCs and also in partnerships or making those S elections, and when they have established their business relationship with their company, they've used their personal social security numbers. That's a no-no. You need to get paid in the business name. And some businesses use debit cards as a means to pay people, or like the e-wallet kind of thing, but they're linked to what I'm seeing is when they're using these debit cards, they're using it for personal and business. So what would happen is when they earn their commissions, they would get those commissions directly on a debit card. And then they go around with this debit card and they're really happy and they're just like going spending. Well, the problem is they're commingling personal and business expenditures. And again, in terms of good documentation, in terms of good business practices, you should keep your personal and your business income and expenses separate. So anytime you're getting that money that comes into a business card, then it should only be used for business expenditures. If you want to take the money out, you transfer it and you show and document, you document your files that this money came out of the business account and it's going over into my personal account, and that would be called a draw for sole proprietorship purposes. So you really need to keep those transactions separate. That will really bode very well for not only your accountant figuring out what was going on, but also to make the argument, should you ever unfortunately find yourself, and God forbid, in an audit position trying to prove your for-profit motive. That will not help you. So I would recommend that you go to your tax professional and inquire about how better to do this, because we're out of time and I know we kind of bounced around a bit, and I am here should anybody have any questions. Reach out to me on Facebook or whatever, or submit some questions and I'll do another one. What do you think, Kathleen?
Awesome. I think that's great. I think it's good information for everyone to have that's either already started their businesses or thinking about doing a business. I think it's very helpful to have gotten them off on the right foot and share that information. Save them some heartache later on.
Oh, absolutely. Keep it simple, folks. Keep it simple, and you'll have more peace coming into this business, this business venture, and take it one step at a time. Don't be pressured into getting all in and just spending money that you may regret having done, but progress up and definitely invest in yourself. So finish the training you're at, go on and move up. That is one of the reasons why it is advisable to start with, if you're new to the industry, to start with a company that doesn't, that maybe isn't like big ticket. where you got to invest a lot before you know whether it's a viable thing for you or not, before you've gotten your arms around the industry, and where you can come in and say, wow, this is a very affordable price. And you had mentioned that, Kathleen. You're not a brick and mortar. You don't have all those other expenses. You're not like a plumber or electrician that needs trucks and all kinds of supplies and licenses and da-da-da-da-da. That's heavy, heavy, heavy expense. So find one that's affordable to come in, a couple $100, whatever, and, just get your arms around it, get that kind of training, get that determination. Wow, come in with the idea that, you are serious. Please do put yourself all in your intention.
Your mind.
With your mind, right? That's critical. That is absolutely critical. But no, you don't need a big incorporated business to prove that you are, fully invested in the idea of having this business. And no, you don't have to spend thousands upon thousands of dollars right away in every single program layer that they have to prove that you're serious about your business. No, step in and show that you're serious about your business by learning, investing consistently in your learning, and applying what you're learning. And get involved with a product line that's something that really resonates with you, or something that you need. And I'm gonna shamelessly, Kathleen, with my affiliation with a financial wellness company, and yours as well. Reason being, it does have all of those factors. It's exactly what I can help my clients when they come to me and they say, hey, Emily, I'm really interested in this. What do you think? Well, this is what I think. One, you need to track you need a business opportunity. You need to make sure that it's an affordable one as you're venturing in. So having it be cost effective is very crucial. Two, does it have the kind of training without having to expend tons of money? Yes, boom, got that. And as you have a business, you need to document those expenses. You need to contemporaneously document. TaxBot is part of it. You need to be able to keep your personal and professional business expenses properly managed and accounted for. So the personal financial wellness software is fantastic for that. And the beauty also is, as I consult with my clients, is oftentimes they need that financial management tool in the first place, and they have debt that they need to address. That oftentimes, Kathleen, is the reason why they're coming online looking for business opportunities. They're financially overwhelmed. They do need the income, so they're looking for income.
And so I can't think of a better starter package for anybody, because it addresses those first things that they need to have when they're first starting out. They can always expand from there.
Oh, yes.
But it's a wonderful place to get started, and talk about affordable. It's very affordable.
Yeah, and the real beauty of it is this, Kathleen. It doesn't have to be the end all. It is where they personally ought to be in a business, because if they're going to start a business, they need to start it right. So this has the absolute best business platform to start with in terms of the documentation, in terms of the affordability and the training. But what's so beautiful about this is that you need this personally, and you need it to start a business with. But from there, Kathleen, we've brought on some beautiful guests, and they've been in a multitude of different opportunities. They've gone on to business consulting, so a number of consultants and a number of other opportunities. But again, they still need this at their core, so they can then go on and say, if it's makeup that they love, or if it's weight loss that they like, or whatever it may be that appeals to their nature, they have the opportunity to then go on, but they have that platform that is so necessary to have their business and personal finances documented properly, and to learn how to manage a business well.
And they can do it on the go. It isn't like they have to wait until they get back home and they've lost receipts, they've done this or that. and lost some of those deductions along the way because they didn't record them. It's, you know, right there. If
Yeah.
you're running a business, you most likely have a smartphone, and everything can be run from your smartphone in this industry. So
Yeah, and taking a picture of those receipts is so core because the receipts fade over time, and the IRS will not accept faded receipts if it doesn't have all the documentation that it needs, the date, the amount, the information for what it was for. If it doesn't have all that information, it's not an acceptable document, and you'll lose it, but having a picture is. So and it also proves that you contemporaneously recorded it. So it really is, it meets all of the requirements for the IRS, which I absolutely love. They can't take it away in an audit like that. If it's a business expense and you got it all documented, it's great. So yeah, it's a wonderful business platform to start with and to just expand from. So whether, you know, no matter what you're going into, consulting, another business opportunity, a partnership with somebody else, you've got that base coverage. You're really operating in a professional manner of business. So I love it. So Kathleen, we are over.
yeah, we are today.
So people, thank you so much, and we appreciate you joining us. Have a blessed day, and we'll catch you tomorrow. Take
All
care.
right. Bye-bye.